Hello, and welcome to CRU's weekly Ferralone Roundup. I'm Tom Butchich, and today I'm joined by George Heppel, James Jury, and Alex Anderson to take a look at the large declines in the global cobalt and FEMO prices. So George, let's take a quick look at cobalt. Tell us about it.
Well, yes, it's been a very eventful few months for cobalt, to say the least. We've seen prices remaining relatively steady for much of Q4 in the Western markets, staying around sort of low 30s in general. But what we've seen over the last few months is we've seen a steady decline with prices reaching low 20s and a very sudden drop. Conversely, what we've seen on the Chinese market is we've seen the Chinese market steadily falling over the last few months in a much more sort of controlled downturn. And what we've seen is that as the arbitrage between China and the US opened up, and at one point it was around $10 per pound, we've seen that Western consumers have increasingly chosen to consume Chinese grades of material, which has meant that a lot of Western producers have in the last month had to slash their offers in order to get rid of very large stockpiles that's opened up. So that's generally what we've seen over the last few weeks. We've seen traders following suit with a lot of sell-offs, of course, and in general, there doesn't seem to be any shortage of supply for cobalt across most key regions at the moment, across all grades, not just cut cathode, but also briquettes and other grades as well.
And George, I mean, just to interject there, I mean, how long, given your rough forecast, do you expect this downtrend to last?
Well, it seems to be driven very much by sort of short-term supply and demand dynamics, changes to inventories and stockpiles, as opposed to sort of a long-term trend on supply and demand. I think most people are expecting 2019 to be a lot more bearish, but fundamentally the long-term supply issues around cobalt metal in particular haven't really been solved. We're still expecting very strong metal demand growth over the next 5 years. And we're not really seeing any new major source of metal supply over that time. So I think 2019 we're expecting the price to be pretty bearish due to sort of a build-up of stockpiles over the last 3 to 6 months. But sort of longer term, beyond a year, we're still expecting metal supply to be volatile, and this will lead to price volatility.
No, thanks very much for that, George. Quite an interesting look going forward for cobalt. Moving on to moly, it has similar bearish downtrend. So, Alex, can you just give us a quick update on what you have been seeing on the markets recently?
Yeah, so the markets were relatively stable throughout the holidays, as you can kind of see through the graph. Not a whole lot of volatility, just sort of the usual ups and downs that moly has. But over the last 2 weeks, Chinese prices fell to their lowest level since the beginning of last year, with weaker mill tenders, and those dampened an already depressed market. Sentiments turned quite negative as a result. So moly concentrate prices have also come off because of the FEMO prices declining, and with the Chinese New Year approaching, weak demand in China is just expected to continue for the near term. Now, these declines in China have also put pressure on the European and U.S. markets. In Europe, prices fell more than 5% week on week. Sales were confirmed this week in the mid-$25 per kilo range. In the U.S., things tend to be a little bit more sheltered there, but declines took place starting yesterday. There was rumor of some lower offers, but we actually confirmed some lower price sales yesterday. Several mills came to the market, and sellers are starting to compete for business, and those lower replacement costs from China are starting to weigh on things. So prices in the U.S. fell 75 cents a pound yesterday, and offers are now reportedly below $12 a pound in the U.S. James, I don't know if you can give a better idea of what we might expect moving forward, but from what I understand, outlooks aren't very good for the remainder of Q1.
Sure, absolutely, Alex. In China, we don't see demand picking up before the new year, and indeed after that, the sort of end of Q1, we think things may be picking up. There's been some announcements of increased investment in infrastructure, which should hopefully boost moly demand going forward, kind of into Q2 and for the rest of the year. In Europe, yes, the stainless market is still weak, and that's expected to be weak for the rest of the quarter. So yeah, I think Q2 is when we could see a bit of a rebound in moly demand, and hopefully the prices will pick up. What people seem to think is that if oxide and FeMo prices in Europe do drop off even more, say if oxide does move below 11 towards say 10.50 or even 10, we think that traders may well jump in and kind of lend some support to the prices there to try and stop any further falls in price. So yeah, for the rest of Q1, yeah, the prospects could be quite bleak, but yeah, we think Q2 that could be a bit of a turning point, hopefully.
No, thanks very much for that, James and Alex. I mean, across many metals involved in the stainless side, we are seeing a bit of a downside, like ferrosilicon, ferrochrome, and now ferromoly. So let's see where it goes. Well, thanks very much, George, James, and Alex, for the market insights. Well, for more information on what's happened in the ferroalloy space and minor metals, be sure to read the full CRU Ferroalloys weekly review that's delivered to your inbox. Thanks very much.